Welcome back to the LPR Trading Group YouTube channel. It's Dave again. I've got another video for you guys, and what I want to do today is I want to talk about TPO charts again. A lot of you guys are interested in TPO and are not quite sure how to use them. I want to kind of break this down and make it very simple. So the way a TPO chart works is it's got two profiles. One profile on the left side, this is a time profile. One profile on the right side, this is a volume profile. So the time profile is broken down into 30-minute time intervals. So this trading section right here is the on session or the ETH session for today, which is January 16th. If I take this and I break this open, okay, if I break this open into TPO sections, you're going to see periods, K, S, T, U, etc., etc. Each one of these periods is a 30-minute interval. So if you take your chart, your regular bar chart, like this, you take your regular bar chart and you go to the 30-minute chart, you're going to be able to align these with the TPO very, very well. Okay, they will line up because each one of these bars is a 30-minute bar. Each one of these TPO periods is a 30-minute period. Now, the nice thing about using TPOs is we can visually see time spent in each location very easily. We know that in the on session, most of the time was spent at this price, which is roughly 4,800 or just shy of. That's where most of the time was spent. This is very, very important. It's also very easy to see poor highs and poor lows. Poor highs and poor lows are when two periods like this come within equal ticks of each other or within one tick of each other, okay? If there is a period sweep like this where we have 1, 2, 3 periods trading below a previous period, this is called excess, okay? This is called excess. In this case, if we have this period when the next period or a following period only trades one tick or equal to that previous period, this is called a poor high. This is an anomaly in the marketplace. This is an inefficiency. These are the things the market wants to clean up. So what did the market do here today? We actually opened up a period right here, right inside of these poor highs. The market failed, and then we came to reattack those highs. Now, in the room, what we did today was we analyzed the TPO chart and we said that inventory for the day is short. How do we know inventory for the day is short? If we look at this right here, which is the on session, we look at Friday's close, we look at Thursday's close. This is from last week, Thursday and Friday's close. All of the price action is trading below Thursday and Friday's close. All of the volume is being done below Thursday and Friday's close. The typical setup we like to look for on days like this is we identify on session low, which is right here. We wait for a sweep or trading below on session low. If the sellers cannot continue to accept price below on session low, meaning they continue to trade and sell below on session low, the chances are we're going to sweep the on session low, drive back into the range. At this point of the day, early on in the day, point of control was down here, so we reclaim point of control, hold, and then we continue to drive price to the upside. Another trade that we looked at for today, let me just get my pointer out here. Another trade that we looked at on today was, this is A period high, this is B period high, C period is this period right here, C period opens, pulls back into A period, and drives back up to where? These areas back up here, these poor highs, okay? C period drives back into the poor highs, 48.15, and then we get this big washout off here. Now, I didn't expect this washout personally for one reason, and I'll show you guys that right now. If we look at this high on the footprint, this is an iceberg, 1896 contracts up at this high. I expect that the market is going to want to come back and retest this high to take this price out. Whether this happens today or tomorrow, or maybe later on in this week, I'm not sure, but this is an anomaly or an inefficiency in the marketplace. The market is going to want to come back and retest this. Why? Because there's going to be a lot of stops and a lot of liquidity above this area. Okay, so if the market can start finding a bid if the market can start finding a bid down in these areas and we can find a long trade, we have a very ambitious target to the upside that we can possibly be looking for, all because of order flow. And we know there is an iceberg there, and we know there's going to be liquidity behind this area. So identifying these areas is very, very, very important. Let's pull this TPO chart back up. So one of the best ways to use TPO here, it's going to be identifying where the most time was spent, then identifying where the most volume was spent, looking at the highs of the TPO chart, looking at the lows, looking to see if we can identify poor highs and poor lows. Poor highs and poor lows, again, are periods like this, Friday's high, C period, D period, E period, G period, all closing or touching the same area. This is a poor high, okay? The market likes to leave excess and wicks like this before it rotates directionally. If we go back and we look at our TPO, we have excess up here. We go back here, excess, excess. The market likes to leave a very clean auction because what the market's doing is it's offering lower until it finds a bid. Once it finds a bid, then we start moving to the upside. So it's got to test lower prices and say, okay, here are the buyers, pick it up. Buyers start aggressively moving their bids up, sellers start getting squeezed out of positions, and the market moves to the upside. Same thing for the top side, moving higher, moving higher. Oh, no one willing to buy any higher. Sellers are all liquidating here, excess, market wants to move lower. And this is market moving from balance to imbalance to balance, looking for another imbalance, possibly to make another balance range or trade inside of a previous made balance range. Let's go back and we'll look at some more of these highs and lows here. We look at this low, excess on the low, excess on the low, excess on the low, excess on the high, excess on the high. These are clean market profiles. If you find market profiles like this, okay, I remember this day actually. Look at this high. You see how this high, we have two periods within one tick of each other? I'll actually zoom this in a little bit, make it easier for you guys to see. We've got D and B period within one tick of each other. You see how this top is very flat? There's no excess just like this. So what is the idea here? Once this session opens, the idea is this is the open price, this green dotted line. This was the close price from this session, open price here. The idea is the market is going to do what? Go and clean up the poor high, which is the inefficiency in the marketplace. Okay, so directionally, TPOs can give you a large advantage on which way you want to be taking the trade, on top of being able to identify where the inventory is positioned, especially in the overnight sessions. Is the inventory position long? Is the inventory position short? Are we trading within a balance? You can make composite profiles on TPO as well, which will squeeze some of the action together, just like this. I've squeezed a few days together here where we had overlapping volume profiles to make one larger composite profile to show me the balance range within, I think this is a 4-day period, okay? So this was sideways price action here. All of the value areas were overlapping, something like this. I squished all of them together and made this profile. Let me take this and I will go unmerge all. Okay, unmerge all. Now you guys can see. This was a range here, range. I took these three profiles, 1, 2, 3, and all I did was merge with prior profile. Merge with prior profile. Now I have a better idea of the value area for those 3 days and where price was accepting within. And what are we doing today? We took the on session, we traded below it, we traded below on session low, and we drove back up where? Right into the previous value for these 3 days. I could take Friday and throw it in there as well. It was a half day, so it didn't show much. But where are we trading? Just above this poor high, back into value area. And what is price doing off of those areas? we rejected off that area, right? So we were trading within balance. We went in balance, traded back into balance, and the market's currently rejecting off those areas. I do personally expect higher, but this is just the rotation of the market. This is how the market ebb and flows. And by using TPOs and really identifying your areas of interest, where you're looking at the market or what prices you're looking at the market taking, whether it's the high side or the low side, you can really have a good idea and understanding of how everything's flowing in the market, especially where bigger players are positioned in the marketplace. I hope this brief video here helped you guys understand TPO and how we use them today. If you guys want more videos on TPO, I know it's a little bit confusing, but really they're simple once you get into them. If you guys want more videos on them, you guys let me know. As always, like, comment, subscribe. Thank you guys so much for all the support. I hope you guys are enjoying the videos, and any comments or questions, leave them down below. I will get back to every single one of your comments. Take care. Good luck on the chart. Cheers, guys.